This is Robert Kraft, and I'm your host on SNN.Network. And in this Wall Street View today, we have a familiar guest, Mr. Maj Soueidan from GeoInvesting.com. Maj, welcome back, man. How's it going?
Great, Bobby. Thanks for having me today. I'm excited to talk to you.
It's great to have you on, as always. And yeah, man, it's been a minute since we caught up, so this will be good.
Yeah. It was
So
good seeing you in Vegas. Yeah, you had a great conference, by the way. I was real impressed. So it's
thanks, man.
thank you for that.
No, thank you. And a lot of people loved your keynote presentation as well. Which humble. I'm just gonna promote a little bit. You can go and check that out actually on our YouTube channel on SNN Network. What do I own with Maj Soueidan? With that, what I want to get into today is the article that you wrote for the recent issue of the magazine, the MicroCap Review, titled "Form 4 Filings: Insider Buying 101." But before we get into that, let's start with your background and what led to your founding of GeoInvesting.
Yeah, I've been a full-time investor for a long time. I started investing in college, and shortly after college, I really decided to really put a lot of effort into it. And in 2000, I think it was seven, I decided just to launch the website to basically bring the research I was doing internally and just sharing it with other people, other investors. For a long time, a lot of, you hear a lot of your friends talking about, small companies all being risky and frauds. And I wanted to say, hey, you know what? No, they're not. And I thought other investors are probably thinking the same thing. So why not create a nice little information portal for people? And it was free for a few years. And then we decided to go to a premium membership. And it's been really nice. So I really enjoy it. And it's a lot of fun. I'm already doing the research anyway. So why not just put it on a website? so,
Yeah, that's
and, and, and it's been a great way to just source ideas from other investors and other people out there. And we found out some of our greatest stocks we've invested in have been from our members and people we've met through GeoInvesting.
cool. Well, you've been a great friend to the program for a while now, and it's always. I always love hearing the story about it, because you've been one of the few that played the long game and been doing this for a while now. I mean, since what, the early 90s?
Yeah. I mean, I think my first stock I bought was maybe 87, maybe. I'm not sure. 88. I can't remember. But
October 87?
no, it was after that. Obviously after that. I was watching my dad do that and suffer through that. But yeah, so maybe it was 88, 89. So in my first year in college there. And it was actually the stock I bought actually was a company coming out of Chapter 11 bankruptcy. And actually, I bought that stock in a stock competition in high school originally and lost money in it because it was Chapter 11. It was actually entering Chapter 11. So I got my revenge with real money.
Mm-hmm.
But that was a long time ago.
That's fine. That would have been really funny if your very first stock you ever bought was on that Black Monday, and just like I was like a natural contrarian from the start.
Well, it depends when you would have bought it. Would you have bought it before or after the crash, right?
Right, exactly. All right, so let's get in. I listen. We could BS all day. I know we could, but I want to get into this article and really cover a topic that we've covered a little bit on the podcast, but I want to really get more in depth on this because you really covered it well in the article. So to start from this article, which again is titled "Form 4 Filings: Insider Buying 101." To start, what is insider buying and Form 4 filings?
Well, look, when insiders or large or directors, for example, or large shareholders, and they buy stock, they have to file certain things with the SEC that they've bought stock or sold stock, either directly through open market transactions or compensation or options or things like that matter. So, and the Form 4 is one of the filings that is typically filed by an insider to disclose what they've been doing. Mm-hmm. And it's something that we follow. And Peter Lynch has a saying, I think off the top of my head, insiders will sell their stock for a number of reasons, but they buy them for only one reason: they think the stock's going to go up, and which is true. And there's some studies out there that that back up the kind of strategy of following in the footsteps of insiders. You can get maybe up to 11% type of, I guess they say, extra return from doing that.
Mm-hmm.
There's one article I read about, and that's just, from my perspective, is what if you're actually doing a lot of great research to basically start picking stocks out of that bunch, maybe that return can get a lot better than that, because you're actually buying stocks for research, not blindly buying stocks or just insider buying is present. So that's been our experience, and and it's more of a strategy I've followed in recent years, and it's really worked really well.
So Maj, what would you say then is the difference between, let's say, insider buying and stock buybacks?
Yeah, well, insider buying is when an individual is buying stock, maybe for their own account, for their own personal
And those
account.
individuals are executive, like people in the company, right?
Yeah, so I believe there. I don't have the actual thing in front of me. It's obviously any insider or director, and I believe it may be a 10% holder.
Right. Management. I got management, employees, board of directors, or 10% owners.
Yes,
Right.
perfect. Yeah, and so when they make these transactions, when they're buying stock directly themselves or receiving stock actually in the company through maybe indirect methods like options and shareholder compensation, they have to file a Form 4. Now, stock buybacks are different. In this situation, the company is taking cash or borrowing money to buy back stock and shares outstanding and return to the treasury, retire the stock. Mm-hmm. So it's a little different.
Mm-hmm. And the main reason I ask is because you mentioned that Peter Lynch quote where someone who's a natural buyer of the stock or someone who buys a stock, they expect it to go up. And my thought process is, because just based on reading the article, the implication is that this is a positive thing when you see management, employees, boards of directors, and 10% owners going in and making insider purchase or buying stock in the open market. However, there's also been a lot in the news about shareholder buybacks and the implications around that. So that was kind of why I asked that question.
Yeah, so it's a little different. The debate there is, well, so when a company buys back stock through a share purchase and reduce their outstanding share count, they inflate their earnings per share because they have less shares. And a lot of companies have used cheap debt to do that. So some will argue that this is only financial engineering, and it's really not a true kind of metric to look at when you're looking at EPS accretion based on that. So that's debatable. It's at some point you got to pay that debt back and maybe get a higher rate, higher cost of capital in the future. So but generally speaking, that's what that debate's all about. Now, when you look at insider buying, there's still it's not always a positive sign, obviously. I mean, you have to do your research, but we did a lot of work in China for a long time at GeoInvesting, exposing a lot of fraudulent activity in China companies that listed in the U.S. And you would see a lot of insider buying going on amongst a lot of those companies that ended up being fraudulent eventually. So what we were, eventually what you would see is you see a lot of these, executives in these Chinese companies making so much money on a stock going up or in a compensation that maybe they were just buying stock here just to make it look good.
Right.
But their net, they still made a lot of money. Even the stock went to zero, they still made a ton of money on other stuff they were doing. Plus, they raised money through financial equity offerings where the money is in China. So it was tough to say. Look, I mean, there's no doubt that an insider's going to buy a stock because they think it's going to go up, but we don't know what their time frame is too. They might be buying a stock they think it's going to go up in 10 years. Who knows? I think that it's cheap. Or you might have an insider buying a stock because they know they're going to do a pump and dump campaign. You might have an insider buy a stock, for a variety of reasons. So we need to try and call out which ones we think are really great businesses that we want to invest in also.
Right.
Now I've definitely seen it. I've seen stocks where you've seen some Form 4s and they're development stage companies and they have no revenue, and the stocks go up because investors just follow in the footsteps. They become these pump and dump kind of things, but they eventually come back down. Right. Our goal is to find stocks that continue to go up and stay up, and if they come down, we want to buy them.
Gotcha. All right. So you pretty much answered this question, but I guess it would be good to ask anyway. Why do you include tracking insider buying as a tool to help gain and I quote here, an information edge?
Well, I think now this is something that's a good question because where is that information edge lie? So from my own experience, following the insider transaction has worked better for me for smaller companies than larger companies, and it's just a situation where I think the information the lag is there for a longer period of time. So when you see you might notice a lot of insider buying going on in a smaller company. investors might not care or just might ignore it for a long time. So you have that chance where the market doesn't react necessarily to the insider buying for a long time. So you have a chance to go in there and buy, hopefully shares in the cheap. Mm-hmm. So that's your kind of advantage there. It's just, it's basically the MicroCap advantage we always talk about, is that investors just ignore the space, even when the CEO is basically begging you to buy the stock. And I can give you some case studies, but it's a situation where I know you don't like talking about symbols, so we won't do that. But there's been situations where I can swear that the insiders were the majority of the volume for months, and it's like, what is wrong with the market? They don't, because they have these negative stereotypes. So the information edge that I've noticed is in that smaller cap and market cap companies, but I don't invest enough in large caps to know if it's really prevalent there too. Mm-hmm. But I don't think it's as prevalent.
Well, my perception also when I think of the information edge too is that if it's in, and again, I'm not a large cap guy myself either, but it seems that there's a lot more people looking at those Form 4s or waiting for a Form 4 to come. So it seems that because there's so much eyeballs already on the stock, when a Form 4 does get filed, that a MEBO person, a MEBO is short for management, employees, board directors, and 10% owners. When someone like that goes and buys the stock, there's so many more people that are following that. They're like, all right, well, we all saw this, but in microcaps, not as many people are following it. So that could be right. That could be that information edge. In that sense.
Yeah, that's basically what it is. Is it's not following it. They don't care, whatever the case might be. Maybe they're not allowed to buy these kind of stocks. It just creates opportunity for us to go in there and maybe follow management
so
and make money with them, hopefully.
Mm-hmm. So my next question then is, and again, we already talked about this a little bit, but what are your reasons then for tracking Form 4 filings? And actually, a better way to answer this is, how do you do it?
Yeah, well, there's different websites out there that let you do that. For us personally, we've developed our own internal tool, where it tracks the insider transactions of all companies, actually, not just small cap companies and market cap companies. And we take a look at that daily. And what we're doing is we're trying to find out, separate the companies where management is buying stock directly in the market with their own money versus receiving compensation or option kind of shares. And we're interested in the companies where management's taking a direct ownership interest with their money. That's really important.
Yeah, because I'm pulling up your article from the magazine right here. So your 5 reasons that you listed in here, and we can discuss this a little more after I read them off, is you want to see when insiders or large investors start loading the boat after shares have fallen hard, to see if insiders start buying stock after a hit piece has been published, to see if management is buying stock near new 52-week highs. I want to talk about that also a little more. And to find patterns that set a near-term bottom in a stock, and then also to see if insiders are selling as they glowingly talk about their company. So we could go by each one, but what's your comment then based on these 5 reasons that you put in the article?
Yeah, generally, basically, it's levels of confidence you're looking for here in terms of what you're doing. So, for example, if I see an insider buying stock near all-time highs, I feel pretty good about that. If they're willing to do that, that's pretty awesome. And so that holds some degree of confidence level that the stock, that even at these prices, they think the stock's going to go higher. One thing I like to look at is, I don't think I mentioned it there, but is kind of these interesting moments where you hadn't seen insider buying in years, maybe decades, a couple of decades, and all of a sudden you see some insider buying coming in. That to me is like a pretty interesting piece of information to take a look at and piques my curiosity. When stocks are going down, that instills fear in us. Like, we're getting scared. We don't know if we want to, what's going on here. And we start seeing insiders buying, it makes us feel a little more comfortable, more confident that, okay, maybe if this is where the insiders willing to start stepping and buy, maybe we can go in there and start adding to our shares or buying stocks. So it's about these confidence level kind of inflection points you're looking for.
Got it. So then, and just so that everyone knows, a Form 4 is a filing with the SEC, correct?
Yes.
Okay. Just want to
Yes.
make sure that's clear. People know.
And when you go to the SEC, it's not, when you go to a SEC.gov, it's not quite obvious it's there. So you have to obviously click a button that says show insider ownership or whatever it is. I don't have in front of me, so it's not to go find them.
But it's intuitive.
It's not the default setting when you go there.
Right. But it's intuitive. Once you go on there, if you want to look up insider buying, you just make sure
You'll
that
find it.
Right. Okay.
Yeah.
So then because really the target is for this is for new investors who are wanting to do all their full due diligence, So, and you did this in the article as well. And can you describe what's on the Form 4 and how to read these pieces of information?
Yeah, so basically, when you're looking at the Form 4, the first thing you want to really look at is when you open it up. There's two tables. I think it's non-derivative. It's called non-derivative table, and then derivative. So the non-derivative table is basically showing you. Well, I think it's a little complicated, but let's keep it simple. Direct, direct buy kind of open market transactions that took place in the stock. The derivative table, usually underneath it, will show you if there was any kind of options granted towards to an executive or to an employee, for example. Mm-hmm. So they're kind of stacked on top of each other. So you look at both of those. So the non-derivative table, the derivative table, I'm not looking really at that as much in terms of signals, buy signals or sell signals, really necessarily. I'm more interested in what's in the other table, and. So, but this is where it gets a little complicated. It's like the derivative table. Maybe let's say you have an option to buy a stock at X amount of money, X price, and then you go do that. So it looks like a direct purchase, like you went out there and bought stock at an exercise price. So it's going to show in the non-derivative table that you went there and made a transaction, but it really wasn't open market. It wasn't really your money, or it might have been free stock you got, for example, right? Or if the stock is like $20 now and the exercise price is 10, you're just going to buy it at 10, sell it 20 exercises. So it's really there's codes there in the non-derivative table to let you know where that purchase originated from, and these I call them the seer codes. And there's I list them in the article where there's certain codes that relate to direct buys, where you went there, you bought the stock, took money out of your wallet. You didn't receive any kind of shares or any options to go buy the stock. And
there's a lot of codes.
A lot of codes. But yeah, I think there's only 2 or 3 you need to know about there. I think was it P and S or
have at it. Let's say well you got the general ones. You put in PSV,
right.
PSNV. The codes for everyone to know they're just one letter, basically. So you had as the general one is P, S, and V. P is the open market or private purchase of non-derivative or derivative security. S is open market or private sale of non-derivative or derivative security. And V is transaction voluntary reported earlier than required. Cool. So then what would you say is the most important takeaway that you'd want a beginning investor to learn from this article and video?
I think it's, if I was a beginner investor, I'd be kind of maybe confused when I enter the market. Like, what do I do? There's 20,000 stocks out there. Okay, so let's say I become a microcap investor. I reduce it to 10,000 stocks. But still a lot of stocks. So how do you do that now? How do you really go out there, not really understanding statements yet and how to analyze the company? How do you continue to narrow the universe down and gain confidence and make right decisions? You want to. I know we learn from our failures, but being successful as early on as we can in investing makes us better and more confident as investors. So to do things like this, follow the insiders, is one great way to start at least maybe increasing your chance of winning early on as an investor. And maybe I would maybe use that as a primary screening tool for a while. If you just look at the insiders and then you really narrow your universe down to a few stocks, maybe a day, and you can start using those stocks and analyzing them, and maybe learning about really great companies, because maybe these are really good companies that tend to be a lot of these smaller companies are undervalued, have a lot of especially right now, and then there's a lot of people ignoring these smaller companies. So you might find a really lucky winner there, like a stock that's just being ignored because it's a small company, growing with insiders buying maybe near its low, and then eventually you make money and you become more confident.
Got it. So Maj, for more information about you and GeoInvesting, where can my audience go and find everything they need to know?
Yeah, if you go to GeoInvesting.com, if you go there and you can send us an email from there. Send me an email directly at maj@geoinvesting.com, and I can answer your questions. I can set up a Skype call, talk. I have no problem doing that. And we have memberships available. A 6-month membership, I think, is like $300 or $299, and a year memberships, I think, about $500, like $499.
Cool.
And that's what it is. And we have a 7-day free trial with our membership. Cool. And every day you get a morning email about what we're looking at, what we might be buying, all stocks coming through our research funnel, summaries of the conferences we go to, like your conference and LD. Mm-hmm. We talk about management teams we met at your conferences. So we're pretty busy here.
I'm waiting on that LD one.
yeah, I saw that. Right? Yeah. We got a little tease a couple weeks ago.
That's right. Maj, dude, always a pleasure, man. Well, I'll catch you on the next article or next interesting piece of news we got out there.
Yeah. Thanks, Bobby.
All right.